Australia's in the middle of a rental crisis. But interestingly, in the month of July, asking rents for houses didn't go up. Why is that? Is this the end of rental increases after the spectacular increases of the last year or so? Well, far from it. But there are some interesting consequences, some unintended consequences that are going to occur from the various governments' interference in our housing markets. So if you're interested in property investment, if you're a tenant, and even if you're a homeowner, I think you're going to get lots of information in my chat today with Dr. Andrew Wilson, Chief Economist of My Housing Market, as we discuss his latest rental market report, and even more importantly, the unintended consequences that are going to flow on to tenants and our property markets. So welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
Australia's in the middle of a rental crisis, and there's no relief in sight for tenants. The news is full of stories of spiralling rents forcing families into secondary accommodation or even towards social housing, with waiting lists even worse than private rentals. So I'm keen to hear details of the latest My Housing Market Rental Report from their Chief Economist, Dr. Andrew Wilson. Hi, Andrew.
Yeah, good day, Mike. We're trying to fix this problem on the demand side, but of course it's the supply side that's the problem. Sometimes feels like we're just sort of shuffling the deck chairs on the Titanic here. The government was all about housing affordability and forgot all about rental affordability. Or the new government, well, the old government too, has paid short shrift to what's now, as you rightly suggested, is a rental crisis.
So what are your latest statistics showing?
Well, perhaps a little bit of a surprise. I'm not sure if it's relief, but the data shows us that over July that asking rents for houses were basically flat. Now, I don't think that's because there's been a rebalancing of supply and demand. I don't even think it's really seasonal factors as well. I just think that we're heading towards a position where rents have increased extraordinarily over the last 12 months. And guess what? Tenants just can't afford to pay any more. We've still got record low vacancy rates for houses. Rents aren't rising as they have been month after month, because I think we've just hit that, for in the short term anyway, an affordability barrier where they just can't keep rising. But they will rise because tenants, or will be, as part of the inflation environment that we have, will be asking for higher wages because they want to be able to pay higher rents, or they have to pay higher rents, which again will just fuel inflation, which again will just fuel higher interest rates, Michael. But yes, the news on house rents was encouraging in the sense that there were no rises. In fact, there was only, all capitals recorded flat results except for Perth, which eased slightly. But the rents, as I said, are so high that tenants are finding it difficult to keep pushing their capacity to keep paying more. But unit rents continue their upward movement, Michael, and I think that there's perhaps some sobering news in that tenants are being priced out of houses and are now looking at the more affordable option, which are units. And it's really only the Melbourne market that remains, I guess, a beacon in terms of offering more choices for tenants for units for rent. But that's come down very, very sharply over the last 12 months. So I think that's only going to be a short-term, perhaps, balance between supply and demand in the Melbourne unit market, particularly if we get the expected flood of migrants coming back into Australia and international students. And typically Melbourne is a key destination for that demand source. So that'll again push those vacancy rates down and match those of other capitals in units.
Well, when you look at vacancy rates in our big three capital cities, they've in general fallen by almost half. In other words, during COVID, people moved out of units. They didn't like sharing lifts and corridors and accommodation with people. But now they've got no choice. First of all, there's no houses to rent. Secondly, houses are more expensive. And I guess people are now getting to live in, let's call it, a more COVID normal world. So apartments are filling up.
They are, Michael. And I think if we look at a bigger picture scenario here, I think what we saw also in terms of those high levels of supply in Melbourne and Sydney for apartments, and that was really the only two cities which did have higher levels of supply, and that was basically inner city Sydney and CBD Melbourne. it was a perfect storm of higher supply and reduced demand when we had COVID. And that, of course, was the shutting of borders. So we didn't have international students, particularly absorbing rentals at Melbourne CBD and Sydney inner city. And also we had more of the Airbnbs moving into that market as well, shifting from holiday to permanent. But the big picture was, Michael, that we had an apartment boom in 15 and 17. And what we saw was the back end of that boom filtering into on-the-ground unit. So it was just the end of the high levels of supply that we had through the apartment boom. And of course, that's gone now. We've hardly been building any apartments since then. And there's significant long-term lags from apartment approvals, of course, until they actually supply the market on the ground. So the outlook is that on all fronts, as the perfect storm was for higher numbers of vacancies in those unit markets, it will be for lower numbers going forward. And it's being added to by the high level of demand and high rents for houses, which mean that a lot of tenants can't afford to rent a house now. So they will be looking at those cheaper options. Even those with families will be looking at units as not just an option, but, really their only destination in terms of what they can afford.
So the rental crisis really is affected by supply and demand. But that started quite a few years ago, Andrew, didn't it? When APRA tightened the screws on investors, investors left the market, and now we're paying the price.
Yeah, and they also tightened it on developers. We also saw some very short and narrow focused policies introduced by state governments. Should we be surprised at that? No, we shouldn't, which increased the levies and stamp duties on international investors, making it hard, which was nonsensical. All it did was reduce supply. For what reasons? International developers can't live in these actual units. They're providing accommodation for those with residency. And I think there'd be a lot of tenants out there would just be certainly wishing that hadn't have occurred, so they'd have more choices out there. But this, of course, is the price you pay for misinformed policy decisions. The long-term consequences can really be difficult to overturn, and we're going to find that now. And this will cause significant grief in terms of family and household budgets for those that are tenants. And of course, the other scenario here, clearly, Michael, is higher rents will fuel the need for higher wages in a full employment economy, which we're already seeing. And that, again, will fuel the capacity for spending that will work its way into consolidating or keeping inflation moving at these 30-year highs that we've got at the moment. And of course, housing costs are a significant part of inflation basket of goods. So it's, as I said, this is now becoming a perfect storm in reverse. And policymakers really have to put up their hand and saying, well, we have to bear some of the responsibility for this. And I notice even the Reserve Bank, who was continuously talking down the tightness in the rental market, even when we were discussing it and revealing it, are now saying that part of this is a fragmenting of the size of families. I mean, really? These are our policymakers, Michael, and these are the rationale for their decision-making. And just have a look and think about how high your rents are now and how high your interest rates are, and think about, well, is this, again, a sign of the incompetence of some of our policymakers, certainly the short-sightedness of some of our policymakers.
Now, there's always going to be tenants, and it's not necessarily people who can't afford to buy. Right. It depends upon their lifestyle. Yes. Some are rent investors. They rent where they want to live but can't afford to pay for and invest elsewhere. And others, it's just the stage of their life. And the governments have left the supply side of this to private investors. But the various state governments are making their state rental laws more onerous for these people who are providing accommodation. Andrew, last year the Victorian government introduced 130 amendments to the Residential Tenancies Act, and in general, these are in favour of the tenants. More recently, Queensland announced it's going to make significant changes to tenants' rights. These are going to be introduced next year. And of course, Queensland's government's now going to increase land tax for property investors based on their interstate holdings. So from June next year, an owner's liability for land tax won't just be determined on what they own in Queensland, but also on properties they own interstate. But there's implications of this for investors, but also for renters. And Andrew, I just read a result of a survey that suggested more than 60% of investors in Western Australia are going to sell up their properties if the proposed changes to the state's rental laws are adopted. All this is just going to make the rental crisis worse.
Absolutely, Michael. And it's just has you shaking your head again when we see the attitude by the mandarins in state governments. We've also seen it at federal government level, as we just discussed, knowing that this will only make the situation worse. And what's the end game here? Rent controls, actual controlling rent. They tried that in New York, and that's been a culture for a long time. And New York's an even bigger disaster as Melbourne and Sydney and Brisbane and Perth and Adelaide, and you can name them all. And their rent controls are pushing investors to other areas, creating even more problems in terms of a lack of supply. And this is all these policies will do, create less supply, push rents up even higher, because you can't control the essence of demand and supply. And then we have the discussions about, we'll provide social housing. We need hundreds of thousands of houses, and that's beyond the capacity of state governments to provide. In fact, we probably need nationally 1 million houses to rebalance our housing markets, and it's just not going to happen. And all these fiddles, Michael, will just end up in higher rents and higher levels of poverty and higher levels of inflation. We've just got to build more houses, and that means more incentives for developers and investors, not less. Read my lips, Michael. It's just Groundhog Day again.
Well, it's been forgotten that most investment properties are not owned by rich moguls. We know that mum and dad investors who only own one or two properties account for more than 90% of all rental providers. So removing their rights regarding their properties, not giving them the right to be able to determine finish leases or choose whether they can, the tenants can paint the properties or amend the properties or have tenants, that's going to have unintended consequences. As you say, all it's going to do is put pressure on governments, and if that's the case, us as taxpayers to provide more accommodation.
And even if we took pathway of saying, okay, well, governments are now going to build houses, they just don't have the capacity to be able to do that at the levels that are clearly required. And of course, Michael, today we have the building approvals data out. Guess what? It fell again. So we're building fewer homes, planning to build fewer homes. And the other point to that, those building approvals, when we release the latest building cost index, my housing market will be releasing that in coming days, it'll show, I'm sure, another leap in the cost of building a house, which means there's more granular disincentives to build a house anyway with high building costs beyond, the policy positions that seem to sound good as a panacea for the political environment in the short term. But the long term is finding ourselves in an even worse position than we have when we started hitting developers and investors nonsensically on the head at the federal level back in 2016 and 17.
Well, isn't it interesting how whatever the government or our regulators seem to do, there are unintended consequences they haven't thought it through. But I believe property investors who have a long-term perspective are going to see through this. You and I have been around. Remember, they removed capital gains tax. They put it back. They introduced GST, and they said that the world was going to come to an end, and it didn't. We've had high interest rates, low interest rates, recessions, and good times. But those who've owned investment-grade properties and A-grade homes over the long term have seen the value of their assets increase, and that, in my mind, is going to continue.
Yeah, absolutely, Michael. But as I said, we just need to build more houses, lots of houses, and we need to do it quickly rather than think about fiddling on the demand side, which will only make things worse. You wait and see.
Okay, well, it'll be interesting to see how all these things pan out. Catch up with you next week for our regular Property Insiders chat.
Yes, thanks, Michael.
In a moment, I'm going to share my popular mindset message with you, but I'd just like to spend a couple of more minutes talking with you about the rental crisis ahead, because the chat you heard a moment ago was one of our regular Property Insider videos that I record each week with Dr. Andrew Wilson. So if you don't subscribe, have a look for Property Insiders on YouTube, or just go to the Michael Yardney YouTube channel and subscribe so you get our regular commentary. But as we were saying, Australia's in the middle of a rental crisis and there is no relief in sight. And it really is an issue of supply and demand. There are just simply a lot fewer properties on the market for rent at a time when a lot more people are looking for rental accommodation. Now, I'm surprised. Maybe I shouldn't be after all these years, but a lot of investors sold up over the last couple of years. The market was booming and estate agents knocked on their doors and they sold up And most of the people who bought the properties were owner-occupiers. And at the same time, as Andrew mentioned, investors were taking their properties out of the long-term rental market pool and moving them into short-term accommodation back onto Airbnb now that our borders have started to open up. But it hasn't really gotten to crisis levels yet. But international and domestic borders have now reopened. What's going to happen with all those international tourists, backpackers, short-stay people are going to come to Australia? That's only going to compound the problem. And as Andrew did mention, that household sizes have been shrinking, and that's because more tenants who previously shared are now looking for more flexible hours. They're working from home, they're starting to look for their own accommodation, they're realising they can't always easily work with other people around them. And as Andrew explained, it's not just houses, but the apartment vacancy rate has plummeted, and therefore there's a shortage of apartments and houses. And it's unlikely to have any real relief in sight. Things are only going to get worse before they get better. You see, investors are required to provide this accommodation, as we were saying a moment ago, because like other parts of our economy, the government's relying on private enterprise. Think about it, there's private hospitals and public hospitals, private transport and public transport, and with regard to public accommodation, interestingly, the government isn't providing enough, so it's depending on people like you and me to provide that. And yes, investors are slowly coming back into the market, but they're not returning in large enough numbers to significantly increase the supply of rental stock. And as we've already mentioned, we're just not building enough apartments. In fact, currently, an increasing number of those shovel-ready housing projects are being abandoned in response to soaring construction costs, jumping interest rates, uncertain end values, and the pullback on development finance. So while the outlook is bleak for renters, and yes, it's not as much fun for property investors with the regulatory changes, if you hold on, you're going to enjoy higher rentals moving forward, which will, I guess, in part offset the higher mortgage costs. Now, I know at Metropole Property Management, Leanne Jobson, our National Director, and the team have been spending a lot of time keeping up to date with the rental changes in Victoria. Well, they're already in place. The new ones coming into Queensland as well. So if you're uncertain about how they're going to affect you, have a chat with your property manager, or why not have a chat with my property manager, the team at Metropole, who we're lucky, we manage over $2 billion worth of assets for clients. So we have the depth of knowledge and the latest software and the most up-to-date systems to look after your properties. And why not have the same property manager who looks after my properties look after yours? Go to metropole.com.au and find out about it. And please don't let this uncertainty scare you out of taking long-term investment decisions. It was coronavirus and property crashes and other things that scared people off before. Now there's legislative changes. Boy, are people worried about the extra land tax costs that are going to happen in Queensland. It's a cost of doing business. Boy, you should see my land tax bill. But if you think about it, if I was going to open up a retail shop, I'd open it up in the Chadstone Shopping Centre in Melbourne, right between David Jones and Myer. I'd be paying the highest rent I could so I could be in the best position I could be. And it's the same with my investment properties. I buy them in A-grade locations, in areas where, yes, the land tax is costing me money, but it's the cost of having my property shop in the best location as well. So it's an investment. It's a cost of doing business. Don't let all these changes scare you. And if you've got a good property manager, they'll protect you from the changes. So with our property markets changing in front of our eyes, you've got to be aware of these changes. And if you're wanting to take advantage of the opportunities, especially when others are sitting on the sidelines, those who do take advantage of it and prepare, because eventually this too shall pass. Eventually interest rates are going to peak, and that could probably be early next year in 2023. Eventually inflation will peak, and that's probably going to be much the same sort of time, and people are going to get into the market, and those who have set themselves up now ready for that, taking advantage of this window of opportunity, are going to look back and say, gee, I'm glad I did this. So where should you buy What should you look for? That's not always easy, and that's why I suggest you have a chat with my team at Metropole. When people come along to us, they're often wanting to know, hey, how much is your consultation going to cost us? What do your services cost? Where should I buy? And in my mind, that's really a shallow conversation. You see, at Metropole, we believe our clients deserve a deeper conversation about the results they want to achieve. So, you see, we find most of our clients are looking for security, but they don't want to take risks at the moment. I understand that. They're looking for wealth-producing rates of return from their investments, not just average returns. And I guess they're doing this because they're wanting more choices in life, more lifestyle. By the way, isn't that what you're looking after? Well, that's why when you work with Metropole, we build you a customised strategic property plan so you get direction. You deserve to know what's happening. You want to be in the know and get clear direction. You want certainty. You want to be able to trust the direction you're moving in and the advisors you're getting it from. And results, you deserve to achieve measurable, proven results. So go to metropole.com.au, find out about our range of services, and let us hold your hand during these more challenging times. Don't let the rocky roads ahead scare you.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
I'd like to have a little chat with you about 7 powerful beliefs of ultra-successful people. You see, at the moment, there's so much uncertainty in the world. There are so many negative things happening that I'd like to share with you how some successful people have become even more successful. Because I think we all need some positivity. And the answer is, if other people manage to do this, so can you. Sure, it's true that successful people get that way through a combination of hard work, positivity, and sometimes they even get a little bit of luck along the way. But many successful people, and I've mentored a lot of very successful people and deal with a lot of successful business people, entrepreneurs and investors at Metropole, and also through our Business Accelerator Mastermind program, I've found that many successful people also have powerful beliefs that help guide their journey to the top. The secret is they understand that success is an attitude. It comes from a framework of powerful beliefs and empowering thoughts. So I'd like to share those beliefs with you now because I'd like to see what you can get out of this to help you reach your goals as well. That's because powerful, successful people believe that the systems inform and inspire their actions, and ultimately it's what makes them successful in everything they do. So let's go through some of these beliefs. The first one is that successful people believe in themselves. I found in general a lot of Australians don't have self-confidence, don't have self-respect, and that holds them back. But if you don't believe in your own abilities, if you don't believe in your own potential, how can you expect anyone else to? That's why incredibly successful people have great self-confidence that even when they may not have all the answers, they believe they can work it out. What it comes down to is that they've got faith in themselves and their potential for greatness. Now, that's not vanity. That's very, very different. You see, the ultra-successful know that if you don't believe in yourself, in your abilities, no one else will. The second important belief of ultra-successful people is they believe they're in charge of their life. This is really important. Here's the thing. They believe that life doesn't happen to them, that life is a result of how they respond to the challenges and the opportunities. They believe they're the pilots of their life, not just a passenger going along for a ride. But in these challenging times we've had recently, a lot of people are playing the victim, and it's not their fault, it's the government's fault, it's everybody else's fault. Successful people have this empowering belief that they're responsible for what they make of any given situation. So that's what allows them to take charge of their destiny. In other words, they don't let setbacks set them back. Instead, they use them as learning experiences and they move on. Another powerful belief that successful people have is that there's opportunities everywhere. So while the recent coronavirus issues have created a lot of people to doubt their future, to be stuck in fear and calamity, successful people are looking for opportunities. That's one of the most powerful beliefs they have. They have an abundant mindset. Where many people see obstacles, see scarcity, successful people see stepping stones. They see stepping stones to great opportunities. Successful people are problem solvers. They're not complainers, and that makes a world of difference. as we work through the 7 beliefs that successful people have, the 4th one I'd like to share with you is their belief in doing things that no one else will. Incredibly successful people don't shy away from taking risks. In fact, they try new things even if they seem trivial, even if they seem simple. What it boils down to is they understand that to be different, they must act differently. They must be willing to try things that others won't. But the risks they take, they're calculated risks. So they're not really that risky. They've got a plan B. They know what's going on. They recognise that, in fact, the biggest risk is in themselves. So let me give you an example. If I asked you, is property development risky, you'd probably say yes. If you asked me, is property development risky, I'd say no. But then if you asked me, well, yeah, but Michael, would developing a 10-story, 12-story apartment block be risky? I'd say, yes, it is, because I've never done it before. So risk is very much in the investor rather than in the commodity, whether it's property, shares, whatever. Now, we're going through the beliefs of successful people. And as I was saying, successful people take risks. They also believe that execution is critical. You see, it's no coincidence that successful people execute what works. Time and time again. They take action. They understand that strategy is only as important as the execution. So you get a lot of information from my podcasts and my blogs, but the power's not in the information. The power is in the action you take. And unfortunately, most people don't take action. They don't act on what they know. In this world, you get paid on not what you know, but on what you do with what you know. So the secret to successful people is they develop an idea, they make a plan, they create a strategy, and then they execute it. And they repeat that strategy. If they need to change it, they'll adapt it a bit. Another belief of successful people is they believe in winning through hard work. Yeah, it's not a surprise. Success comes from hard work. I know a lot of people look on the outside and think, oh, it's just luck. No, it's not. Successful people know that work comes first and then payoff comes later. When others quit and compromise their values, successful people keep going. The reason why they become victors in the end is not so much because they're smarter or better connected or more talented. It's because the last person left standing when others fail is the winner. So they just keep going and they work harder. And the last belief of successful people I'd like to share with you today, sure, they've got lots, but the last one I'd like to share with you is they believe in giving back. Now, most people don't recognise this, but a lot of charity comes from the wealthy people. I've said it before, giving back is one of the ways successful people show their gratitude for all the opportunities they've been given. Giving back also keeps them grounded, keeps them humble, keeps them in touch with reality. Believing in the power of giving back reminds them they must keep working and playing their part to make the world a better place for everybody. So people often ask me, why do you give away so much information for free? Why do you do all this? And I've been very fortunate. I've come from humble beginnings and I'm now fortunately very successful in business and wealthy in a whole lot of ways. And I believe it's part of my responsibility to help other people up the ladder as well. And that's why I ask you to keep sharing this podcast with other people. Jointly together, we can actually help more people become successful. But this last belief of successful people is a lesson for all of us. If everyone had the habit of sharing the blessings in their lives, we'd all be happier. We'd all be richer for it. Believing that you can be successful is part of the secret to achievement, but believing that you can make a difference in other people's lives is also a valuable lesson for everyone too. So now there's a time for you to believe in yourself. It's a time for you to take action and set yourself up for the opportunities that are going to present themselves as our property markets move on. So if you're wondering what's ahead in these confusing times, why not have a chat with my team at Metropole to help provide you with direction, to help provide you with guidance, to help get you results. In challenging times like we're experiencing, you need an advisor who takes a holistic approach to your wealth creation. That's exactly what you get from my team at Metropole. We've got no properties for sale, but if you're looking to get into property, we've got a number of ways of helping you. We put together strategic property plans so you can plan to become the person you plan to become. Hey, wasn't that one of the beliefs of successful people? We have a buyer's agency, Australia's most trusted buyer's agent, who've been involved in over $3.5 billion worth of property transactions, we can help you too. We have a wealth advisory division run by Ken Race. We've got property management divisions, renovations and development. Why not go to metropole.com.au and start with a strategic chat? Metropole.com.au or call us on 1300 Metropole. I'd love to be part of your wealth creation journey. Well, I hope you got some benefit from my chat with Andrew Wilson today. And by the way, why not go back to some of the back episodes? We've got over 400 episodes of the Michael Yardney podcast, each of them a lesson on their own to help you get more clarity about what's happening in the property markets. But if you did get some benefit from today's show, why not tell somebody else about it? There's a share button on every podcast app, or tell the world about it, leaving a review on Apple Podcasts or Spotify or wherever you listen to this. And I'll be back again real soon, but you can catch me in between on social media. By the way, I've got a way of saying thank you for subscribing to this podcast. Just go to podcastbonus.com.au, podcastbonus.com.au. I'll leave a link in the show notes, and you can get a bundle of ebooks and reports as my way of saying thank you. As I said, I'll be back real soon. You can chase me on social media. Otherwise, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?